everyone, welcome back to Corporate Decoder, place where we tell you what's really going on inside those boring corporate reports, and today's is extra boring. Get ready for excitement like you've never seen as we dive into the MFS Active Exchange Traded Funds Trust Annual Shareholder Report. Buckle up because we're about to explore some funds you've probably never heard of, but whose numbers still tell an interesting story. It's a mixed bag. Some ETFs are doing okay, others struggling to beat their benchmarks. We're going to break down exactly where the money is, where it's going, and what it all means in plain English. First off, this is a Form N-CSR, meaning it's a certified shareholder report for registered investment companies. Think of it as a report card that these funds send to their investors, making sure everyone knows how the money is being handled. The report covers the fiscal year that ends in February, so the data is relatively fresh. The main part of the report is item 1, which gives us the juicy details of each fund's performance. We're talking MFS Active Core Plus Bond ETF, MFS Active Growth ETF, and a few others. Let's see if any of them are actually worth your attention. Let's start with the bond fund. It says it tries to perform better than Bloomberg US Aggregate Bond Index. What does management says? Here's the deal. For the period near end of February, the fund's total return was 0.86%. Its benchmark, 0.85%. Barely beating it is like winning a race by a nose. Not too exciting. Check this out. The fund expenses are listed at $8 per $10,000 invested, but that's only for a partial year. They openly admit that a full year is going to be higher, so yeah, don't let that low number fool you. The average annual return since the fund started is that same 0.86%. The management tries to justify the number by saying that favorable exposure to the CMO sector and not owning any securities within the mortgage-backed security sector helped them. Next up, the MFS Active Growth ETF, and its returns have to compete against the Russell 3000 Index and the Russell 1000 Growth Index. For that same near end of February period, this ETF actually lost 3000 Index, which lost 2.79%, so it lost more than the market, not great. That other index, the Russell 1000 Growth Index, lost 3.63%, so it beat that, but still lost money. Growth Index lost 3.63%, so it beat that, but still lost money. The fund costs are listed as $11 per $10,000 investment, so slightly pricier than the bond ETF. Since the fund started, the average annual returns are negative 3.28%. They try to explain this by saying that stock selection in the information technology sector weighed on their results. Basically, they picked the wrong tech stocks. Ouch. Let's check out the MFS Active Intermediate Muni Bond ETF. This one focuses on municipal bonds, which are supposed to be relatively safe. They compare themselves to Bloomberg Municipal Bond Index and Bloomberg Municipal 115-Year Index. Alright, this fund provided a total return of 0, quick to brag, beat 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 0 per point index, but failed to mention that they failed to outperform Bloomberg Municipal 115-Year Index with 0.37% of return. The expenses for this fund, $8 per $10,000 invested. So back to the bond ETF level on expenses. The management also noted that security selection and favorable bond selection within the housing sector strengthened relative returns, but the fund's longer duration stance also detracted from relative performance. They say that from a quality perspective, A and A-rated bonds benefited the fund. How about the MFS Active International ETF and whether it can compete against MSCI All Country World ex-US Index Net Div? Okay, this fund actually beat its benchmark. It had a total return of 2.21% compared to the benchmark's 2.04%. This fund is costing $14,000, so the most expensive one yet. The stock selection and the fund's relative currency exposure contributed to relative performance. The stock selection within the information technology and industrial sectors dampened relative results. The last one is the MFS Active Value ETF, competing against Russell 3000 Index and Russell 1000 Value Index. And this fund also beat its benchmarks. It had a total return of 1.96%, while the Russell 3000 lost 2.79% and the Russell 1000 Value Index lost 0.97%. This one comes in at $10 per $10,000 investment. Security selection within the healthcare, information technology, financials, and industrial sectors strengthened relative performance, and not owning any securities within the communication services sector held back relative performance. This fund seems to be doing all right. Moving on from the fund's performance, let's talk about ethics. Every company needs a code of ethics, like a moral compass to keep everyone in check. This report confirms that MFS has one, and it applies to their top executives and financial officers. What is the code of ethics? They didn't change it this past year, and no one got a get out of jail free card called a waiver. It's good to know they're keeping things ethical, at least on paper. The form also confirms that the company has an audit committee and that certain members are designated as financial experts. This is to ensure that someone with real financial chops is keeping an eye on things. Speaking of keeping an eye on things, let's talk about the accountants. Ernst & Young LLT is the independent accountant for these funds. We are going to gloss over the numbers so you don't fall asleep. For this year, the total audit fees billed to MFS active ETFs was $120,000. The most of audit fees was for MFS active core plus bond ETF, $25,900. The audit committee has to pre-approve all audit and non-audit services and has procedures. The form mentions that registrant has an audit committee established in accordance with Section 3 Act 58 of the Securities Exchange Act of 1934, and its members are 5 people. Not really important for us. Finally, the report touches on controls and procedures, basically saying that the financial officers believe everything is in order and that their system for reporting information is working well. So what's the real story here? These ETFs are a mixed bag. One, the international ETF is outperforming its benchmark. Another is pretty much matching the index. And the others are losing to it. They also admit to problems with selection. The numbers make it obvious. MFS has some work to do to justify those management fees, especially for the active growth ETF. Sure, the company mentions a few strategies, but it doesn't look like they're too proud to brag about them, since many of them failed to beat its benchmarks. Thanks for watching. If you found this breakdown helpful, give us a like, leave a comment, and subscribe for more corporate deep dives. Until next time, keep those investments active, I guess.